Good morning. I'm Gilbert Rampo. I will be facilitating the webinar today. Welcome so much for everyone for joining us. If there is any question through the webinar, you're more than welcome to type it in the chat, or we can wait for after the presentation. Then we can have discussions based on the questions that you might have. I think we are still awaiting a good 10 to 20 more people. So I will give us another, say, 3, 4 minutes. Maybe we will start at 10:05 just to allow other people just to join in. With a show of hands, can you just confirm that I'm 100% audible? Thank you so much. Thank you. All right, so we will officially start at 10:05 just to allow other people to join. Hi. So I think we can proceed. Those that still have their hands up, thank you. We can click on the hands just so we can clear the board. Okay, so I am going to share my screen and I am also recording this session for reference purposes. So if you're going to need like a copy of it, you can request it. I will give the details, however, at the end of how you will actually get the request. I think, yeah, well, there's still quite a big number of people that are still not have joined us yet, but I think we can continue. It's 10:07 right now. Um, I'm going to share my screen. Just give me 1 second, please. Right. So the purpose of this webinar is to actually just prepare for the year-end rollover. I know most of us are completed with. Okay, so sorry, Michelle Clemens, Sonette Lombard, and Rosalind Marais. Can you please drop the hands? Thank you so much. We can proceed. Right. So we're preparing to roll over. Most of us have completed our January payrolls. So now we are preparing to roll over into February, where we're going to actually do the rollover into year end, which could be a daunting task. So we're going to actually try to make that a little bit easier for you guys through this webinar. At any point, you can ask your questions in the chat. Let me open up the chat here so that I can be able to see if someone does. There you go. All right, so we can start. So I'll just go through the knowledge-based articles that we do actually have for the preparation for year-end rollover. So it's pretty almost standard and the same as the mid-year one, where we need to firstly be on the latest version of Pastel Payroll. Um, we need to also reinstate employees that are on maternity leave. The reason for that is once you roll over with someone that's terminated because they are on maternity leave, the system will create a final certificate for them, and you will be not be able to reinstate them on the same master file because now there will be a clash. So it is always, always very important to reinstate them, then roll over into year end. And then once you're in March, you can re-terminate them so that they don't get a final certificate when you do your year end because they're still active employees of your company. Uh, that's the important part about the maternity leave. Okay. And thirdly, sorry, you need to run and clear the exception report, all of them. Now the system will not allow you to go forward with any exception on there, which we're going to actually just run through some of them because I think the next webinar will be the actual year-end process where exceptions will be discussed in more detail and in more length. Okay. And then obviously now you will need to process your pay slips now for February, which is the last month for the financial year. As per normal, you just process your pay slips for February. Um, and then print all your monthly statutory reports because something like a 201, the monthly 201, EMP 201, you will not be able to print it when once you have rolled over into year end. So it's advisable to actually do everything in February. Okay. And of the sixth thing, we're going to just go through everything in detail, right? Don't be scared that I'm going through quick. Okay, so with creating a backup is also very important to say this is a backup of my whole entire year. It's always best to have a backup saved on the PC. If you have something like a cloud backing up system, save it also on the cloud backup. If you have an external hard drive, save it also on the external hard drive. My personal rule as payroll administrator is backup on three different locations. Should your laptop crash beyond repair or get stolen, it will be stolen with all your backups or all your information, and that could spell disaster. So backing up in three different locations is the best way to go. Okay. All right. Um, After doing your payroll, um, obviously we would need to check the exception report again because there's a payroll exception report and then there's an IRP5 exception report. Some exceptions are interlinked, some are just linked to the processing that you will be doing in February. So you need to make sure before you roll over that it's still clear. Even after you roll over into the year end, you still need to, the first thing you do is to check the exception report so that if anything could arise, because sometimes, with computer things when you're doing the rollover. Something can go wrong during that rollover, which doesn't like maybe one out of 10,000 rollovers will have an anomaly like that, which might create an exception. But restoring back to February and then rolling over again normally would fix that. So that's why we said it is important to have that backup in February, just so we know we are clear. Should anything go wrong, we can always revert back to February and start all over again. Okay. And then the step nine would be obviously to create your copy company, which all of these steps will have some would have videos, some would have KB articles, knowledge base articles on how to do all of these things. But we are going to go through some, well, most of them today. Okay. So we're currently still on 2025 update 2A, and we are anticipating there will be a new release 2026 update 1. It's just not released yet. We're still waiting for the SONA and to see what the president will announce with the text changes or the changes basically will be. So, but for now, if you are ready to roll over, you can still roll over because remember the actual submissions will be done in April. See, so you can still roll over, but just make sure you are on the latest version that's available currently on our website, which is payroll update.sage South Africa.co.za/pastel. Let me copy this and actually paste it in the chat here below. All right, so this is the latest version, 2025 update 2A. So if you're on anything less than this, please update it to the latest version before you do your rollover. Okay, so that was step number one. Step number two, we clear exceptions. So we will just run down through. Oh, sorry. Step number two is actually reinstating employees from maternity leave. Okay, so I'll click on that knowledge base article. So let me actually do this. Maybe you can also have this on your end. Um, the knowledge base, the year end procedure to prepare. Okay, so it was also on the chat there. So reinstating your employees from the master file. So basically, you will go to that employee's. What is this? The employee's master file. Let's see if I can get this on screen. With a show of hands, can you see my Pastel Payroll? Over. Awesome. Thank you. So we'll just do a rundown because more detailed webinar will follow. Okay. So, for example, this person is terminated. So let's just say they are on maternity leave. We come to this little green icon, which looks like a man wearing a tie. If you click on there, it will ask you if you're sure you want to reinstate this employee. Then your answer should be yes. And then it will ask you, do you want to reinstate on the current master file or reinstate with a new master file? So the difference here, just so you know, the current master file is because this employee is on maternity leave and still actively employed with the company. So there's no break in service. See, so if you are reinstating on a new master file, that means there's a break in service, meaning this employee was terminated for 3 months and maybe you hired them back, so they worked in a different company for those 3 months. So you would need to reinstate them on a new master file because they broke their service. So they should have a new start date, a new employee number, um, a new record, basically with HR. Okay, so that's literally what you will do. Select employees current master file, and you say okay, and our little icon there will turn orange. That means the employee's status now has changed from terminated to not processed, meaning we will just need to go to their payslip and make everything zero. You just need to make sure that everything is zero so that this employee, because they in essence terminated. Okay, so we'll just zero everything out. And I know in a lot of cases when zeroing out, so, text normally reverses. Like now in this instance, the text has reversed to minus 5,000, which is normal because this employee has been terminated for a few number of months. Now, when the system calculates tax based on the periods worked or the months worked, it realizes that they kind of overtaxed the employees. So it does reverse it. So all you need to do is just go to the deductions tab and tick override. This is the only time when override is actually acceptable. And you can make that zero as well. So there's still a negative 12 rands. So that's the levy. I think it's a standard amount. We override it as well. Make it zero, zero, and safe. So the pay slips is zero. The employees reinstated. And now we are ready to just payroll run and then roll them over into year end. And then obviously now in once we are done with the year end, once we've rolled into March, then we come back to the payslip. We can add in back the amounts that they earn and then terminate them again because I would assume, say for example, they're coming back from maternity leave in April. In March, they still shouldn't get anything. So you re-terminate them. Okay. So let's just minimize this. Let's go back to our steps on the preparations. Once we have reinstated the employee, we run to the exception reports. So I'll just go through a few exceptions. Um, Employee tax numbers missing. So this is a list basically of some of the most common exceptions you get in this period. Okay, so there's going to be another exception more detailed when once you have rolled into year end, but that would be on the next webinar, which will be discussing um, the year end process actually. Okay. Before we proceed, any questions? You can feel free to enter the questions in the chat so that we don't go too forward sometimes and there's something that you don't understand or you'd like clarity on. Okay. So another common exception that we get is this one. I'll just click on them. It says the tax code 3615 is no longer allowed from 1 March 2018 as per SARS. So basically, this is just a warning that you would get from the system if you have a director on your payroll. So it just means that the director's remuneration is no longer in use. So whether you're a director or a normal employee, we will all get paid on 3601, which is just the normal taxable income. Okay, so this one is just going like you don't need to act on it. It's just the system saying, oh, hey, hello, I'm seeing that you have director's remuneration on this employee's payslip. Just to let you know, on the IRP5s, don't be alarmed when you see that director's remuneration is 3601. See, so yeah, that's I think the simplest way I can explain that one. Um, the 3833, it's actually going to be discussed in detail, but this is mostly um, for council clients. Okay. So we can go into a very common one also, the 3696 plus 3699 not equal to income sources. Okay, so this exception is that not all your income codes are equal to the correct tax totals in Sage Pastel Payroll. The exception be can be due to various reasons like transaction templates not set up correctly or discrepancy in the database tables. For example, if you have custom transactions and then you have ticked the tax totals that are incorrect or inconsistent because other tax totals are dependent on other tax totals. So if you have a tax total um, uh, yeah, that depends on another tax total, that will give us this error. So we need to firstly check if there are any codes that are custom created, which normally we don't we don't assist with customization, be it a new transaction and a new transaction template, for such a reason, because if it is not set up correctly, or it was not text correctly because of the text totals that uh, were ticked, that could lead back to us having to pay the penalties. So, and our agents on the floor are not tax practitioners or tax advisors in any way. So we support the software instead of supporting legislation. So if there's any legislation, for example, a transaction that you want that is custom. For example, if you want an income that will look at the number of days in a month versus, like, if you want a specific income that works in a specific way, we have what we call business partners that can actually create such a transaction for you. But if the tax totals are ticked incorrectly or inconsistently, you will get an exception. So it's something that you can actually point back to their business partner and say, oh, you created this transaction, it's giving me problems, fix it. You know. Um, so that, yeah, you can read through the exception itself, and how it actually gets resolved. And another one that is common is tax total 4474 not equal to 3810. So this one is basically for medical aid, company contribution. So this exception states that the total value that has been paid by the company towards a medical aid does not match the fringe benefit of that value. So remember, medical aid company contribution is taxed 100%. So if the company contributes 1,000 rand, you'll be taxed 1,000 rands on that. So if the company contributions for medical aid, let's say the year to date is 120,000, but the fringe benefit which in this case in Pastel Payroll will be transaction code 6172, is 100,000. You will get this exception saying 4474, which is the company contribution. It does not equate to the medical aid fringe, taxable fringe benefit. So in that case, you would need to actually go figure out firstly which one is the correct amount. Is the 120,000 company contribution correct, or is the 100,000 fringe benefit correct? So you might find that the fringe benefit is actually 100% correct. It's just there was an extra payment, or the contribution was doubled in the beginning, or in 1 month the contribution was doubled. So you need to figure out which one is supposed to be the amount, the 120 or the 100,000. So if it's the 120,000, that's correct. That means you need to go to the taxable fringe benefit of the medical aid and take override, and in that current month's value, add that difference, which is now the 20,000. Meaning tax would be higher for April because this person has been taxed less by 20,000 the whole year. So the tax would be affected. There would be an impact on tax, meaning the employee had paid less tax than they're supposed to. So this exception actually, you can't clear it in year end. It would need to take us back to that important backup that we have for February. So you'll need to roll back into February, fix the year to date difference between the contribution and the fringe benefit, and then roll over again into year end so that you don't have any of that exception anymore. Okay. Let's see here. So both the negative tax totals, I'm not going to touch all the three of them. It literally just means that you can't get a negative income or a negative allowance as a year to date. So, for example, I get a cell phone allowance for 1,000 rands every single month. Um, but in February, the administrator realizes, no, I'm not supposed to get a cell phone allowance. They reverse it. But instead of reversing 11,000, they reverse 21,000, for example, which will take my year to date for the cell phone allowance into a negative 9,000, for example. As a year to date, you can't have a negative as a year to date at the end of the year, around February. You see, so that's why you would get that negative tax total. So you just need to look at the monthly analysis and just check the actual total for 12 months. What transaction has negatives on there, and what year to date or what total. Let's just do a monthly analysis quickly so I can show you exactly what I mean by that. So view payroll reports, monthly analysis. And we can just do it for one person. Uh, so this was what the monthly analysis would look like. But this is an example of that person that was on maternity leave. This company actually gives very long maternity leaves. So if anywhere here on the total, there's a negative. For example, here we're seeing a negative 7,600. But if we look nicely, it's a leave taken value. So it makes sense that this employee actually took leave. So this is what was calculated. So this is okay to be negative. But if, say, for example, commission here, the year to date here was negative 200, that was going to be incorrect because you can't have an income have a year to date that's negative. So that's why you would get negative tax totals detected. So you just need to figure out which transaction has a negative here. And in some cases, it will be medical aid tax credit applied, um, where I know in some cases you will find that, remember, medical aid tax credit applied at a tax reducing deductibles rather than an income. So let me put it this way: if your tax deductible, your tax credit, medical aid tax credit is minus 1,000 rand, but your tax, your pay as you earn for this month is 500. The medical aid tax credits can only take 500. It can't take more than what you have on your tax. So I know some cases a person would see that, no, I've got 1,000 medical aid, my negative 1,000 medical aid tax credit, meaning I'm supposed to have a 500 negative tax so that I get paid, or my salary will go up by 500. It does not work like that. Once you override medical aid tax credits and force the full 1,000 rands, it will give a negative tax total and say, no, how come tax year to date be in a negative? The first, like, it either needs to be zero or positive. That's it. If it becomes negative, it's a negative tax total, and SARS does not like that at all. Okay. So something like 4116, we can open it. Let's see what cause is it. Okay, there's no cause. You receive this exception when the tax total for 4116 is available, but tax total 4005 no 4005 exists. So if you're doing your biennials or your year-end submission, when you get this exception, you will need to restore back to the last period in that reporting phase. Last period being August or February year-end to do the correction. If you restore, need to recapture all the months between restoring you are currently in. If you do not wish to recapture, you can have a data fix done by a business partner, which is chargeable. I think they highlighted it in that sense. And just so for reference sake, the business partners don't charge the same. Others would charge 1,000 an hour, others would charge 1,003 an hour, others would charge 400 an hour. It just depends who you get. You see. So uh, so this can be fixed in two ways, right? Um, add the medical aid code to the payslip. Check the default to see if you have 8,000 or 8,002 processed. So you will need to add it in the correct medical aid transaction that is applicable to your employee, um, or remove the incorrect codes from the payslip. If these codes have been processed incorrectly and the employee does not have medical aid, these codes will be removed from the payslips. And then you click on the deductions, click on the code 8,000, click override, and make the value for transaction code 8,000. See, so this is just also that there's medical aid tax credits processed, but you don't have medical aid, or the employee does not have medical aid, or the employee has a medical insurance which was processed incorrectly as a medical aid. Yeah, I think that's the best way to explain it. So for that, you can read a little bit more on it on the knowledge base article. Then we can go to 4142 has a value, but SDL is exempt. This one is also very common where your company does not pay over SDL or does not qualify for SDL. Or for some reason, you realize that the system has been calculating SDL for 4 months. And then you just tick this company does not qualify for SDL. But now it becomes a problem in the sense that now you have a year to date for SDL. But now you also have SDL is your company is exempt from SDL. So now it becomes a conflict. It becomes a conflict. So the quickest resolution would be to reverse the year to date. So if the year to date on the SDL, let's do it practically on a payslip. So there's SDL. It has a year to date of 769. We go to contributions. Yeah, so there's SDL and there's a year to date of 837 rand. So we will need to reverse this year to date because you're exempt. You're not supposed to have a year to date amount for SDL. So that's when you tick override and normally just make 0 first and see. Yeah. And then you say negative 769.65. Now the year to date now is 0. And then when you save that, that exception should go off. Like should not be there anymore because now you are exempt and there's no year to date on the SDL. And what's nice about this one does not actually affect the payslip. Doing this does not affect the net pay, deductions, or income. The payslip will pretty much still stay the same. Unlike if we are changing something like on a medical tax credit. Yeah, so if you change something on a medical tax credit, it would have an impact on your pay as you earn. And one other important thing is if that is the case, like for a medical tax credit, if you change it in February and you had already paid um, your EMP 201 for the month, you might need to resubmit it because now there's a difference in tax, so that your EMP 541 that and what you have paid over to SARS and what you have on your 201 actually match. See, so that also I don't want to dwell too much into it. It will be discussed with the actual webinar for tax year end. Yeah. So, any questions so far? Feel free to give a thumbs up if you are still good. It's so quiet. I feel like I'm talking to myself. Oh, a hand. Ah, there we go. Thank you, Helen. Okay, so we also have a full range of um, videos on YouTube that you can watch, and they're fairly because we understand like no one has an hour, 30 minutes to watch a video. So they're actually quite fair. They're like 20 minutes, 15, 3 minutes, just depending on which video that you are interested in. See, so if it's like a particular video on an exception, it will be like 2 minutes or 3 minute video that will just explain how to get rid of that exception. Or if you want a whole year end process, Obviously, now the video will be longer, maybe 30 minutes, 45 minutes, but it will be in detail. Um, yeah, without leaving any stone unturned in a way. Okay, so my presentation is at 45 minutes now, and I don't know if there's anything else you guys like us to address or discuss. I am here, and we still got 15 minutes to go. Okay, because I'm thinking now practically what we can do is just see what it looks like when you roll over into year end. Okay, so we start with the exception reports. So it's you go to view statutory reports and IRP 5/83A exception report. You bring up all the employees, you just say okay, and print to screen, which I prefer. Print status should be on both because there are some certificates that are printed and some that are not printed. Stick to both, and I normally just exclude text numbers. One thing about text numbers and submissions also is because SARS made it mandatory for everyone to have text numbers. If an employee does not have a text number on their master file, this will always raise a flag with the system. But and SARS sometimes will penalize you, sometimes won't. But we can't say it does penalize you for submitting without text numbers, and we can't say it doesn't penalize you because they do their random audits, and if they find that there are employees with no text numbers, they may impose penalties based on that. So for this exercise, we exclude in the text numbers because it won't hinder us from continuing with doing the year end. Okay, so in our exception report, firstly, it tells us about setup company parameters. So this is how you read it. Because on payroll, we have this setup button, and then you select company parameters after that. So let's see what it's complaining about. The telephone number entered is invalid. The total length for this telephone area code must be at least 9 characters and no spaces allowed. Okay, so let's start with that one first. Set up company parameters. So it complains about 011. So let's just say 1, 2, 3, 4, 5, 6, 7, 8, 9. 011, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, and save. Right, now we can go to view statutory reports again and select exception report. And let's have a look. So we're looking for WS 0004. If tax total 4116 medical aid has a value, then 4005 medical aid contributions must have a value. So it basically means there's tax credits, but there's no medical aid contributions. So let's have a look at WS 0004. At least we are still in February, and we can WS 004. So in this instance, that's our employee WS 0004, and there's medical aid tax credit applied. And the first incorrect thing is that it is positive. Tax credit applied is negative. And there's an override box here. So in essence, we should just remove the override and the system will go to default and say, no, this person does not have a medical aid and thus does not want, or does not need to have this transaction on there. And then we can save. And then if we go to view the exception reports again, then it's clear. This is what we want to see. As soon as it's clear, we are happy. Okay. So we can do a payroll run because we have just paid our employees for February now. So it's payroll run. Okay, let me go back. So it will always give this message. So this is the final payroll run for some of your selected employees. A payroll run exception report. Please run a payroll run exception report to correct any problems before continuing. And then it gives you this article, which will take you to those articles that we had. And just say, okay, it's doing its thing. So remember, I did advise that there's a payroll run exception and then there's a IRP5 exception. So this is a payroll run exception. Okay, so let's have a look. For employee OF 00046411, employer contributions, there are employer contributions towards Provident Fund, but no benefit transaction was processed. Select the benefit transaction. So it gives us the transaction here. It's 6411, and that goes for um, this employee also WS2002. So let's fix the first one. OF 0004. So you go to view asset, sorry, payslip. And OF. So we need to just enter 6411 for them. And it should have a calculation there. Okay, so let's do a payroll runners again. And let's see the exception report again, the payroll run exception. And for OF 0005, we've got UIF missing or exempt not checked. Please add the UIF code on the transaction. So OF 0005, you can have a look at that one. So we've got 9045 company contribution, and I'm not seeing an 8045. 8045 employee contribution, and yes, okay. We are getting closer and closer. Oh, if you want to do it quicker, obviously, maybe you might need to print out that payroll exception report and fix it one by one. It's just now I'm just doing this for educational purposes for us to do it one by one like this. See, for WS 0002, 6411 is missing, so there's no taxable fringe benefit for them. It's WS. This one, 641. Yeah. It also just adds that. Save. Those. Now we can do a payroll run and let's see. So the payroll run is completed. We are happy that we don't have any IRP5 exceptions. We don't have any um, payroll run exceptions. Now we can roll over, do a pay period update, process pay period update. Next. So this is the important part. Must create a backup for February. I know that this backup is the one that I'm going to always refer to. Okay. Uh, so it says monthly. So even if you have weekly, fortnightly, what's important here with these ones is that all of them, before you roll over into year end, need to be like weekly needs will need to be in the last week of the year. Fortnightly will need to be on the last fortnight of the year. Also, so that all the frequencies will roll into year end at the same time. Okay, so for now we only have monthly. So we process, operation complete. And what you will recognize is here at the bottom, it will say year end 2024, 2025. And what you'll also see is that the pay slip is grayed out, payroll run is grayed out, and under process, you can only do year end update. Everything is grayed out. So this is what we call a year end period. You can print all the reports that you need except, remember I said 201s you can't report, print your monthly reports. You can't submit UIF. You can only do your EMP 501, etc., etc. So this is what a year-end preparation looks like. Now we are waiting to go into March. We are waiting for SARS to open the submissions so that we can do the submissions. Um, so what happens now from here to March will be discussed in our next webinar, okay, which will be the year-end process. I think I can end it here. Thank you so much for attending. You could have been anywhere in the world, but you are here with me. Thank you. It is highly appreciated. Um, Feel free to add any comments on the chats. I think this recording will be available immediately after we end it. I think for a few days. And I think I'm going to also add a survey to this meeting to just please rate this webinar. Where can we improve? What you liked, what you didn't like, um, and I would really, really, really appreciate that, so that the next webinar gets better than the previous one. And I'd like to end it there. If there's no questions, have a very blessed rest of the day and a productive one until we meet again. Goodbye.